sponsored by the Securities and Exchange Commission of Nigeria.
Over the next few months, investors seeking returns on Nigeria's financial markets will have the option to buy a wide range of investment schemes, as the Securities and Exchange Commission reviews and approves a number of specialized funds. These include funds raised to support the development of various infrastructure projects.
In terms of fundraising for infrastructure, a lot of what you've been seeing has been fundraising by strong sponsors going via syndicated loans by a number of banks. So you're talking about pipelines, talking about some power-related assets. A number of banks come together and provide a loan which is backed by future cash flows of the asset and also by significant equity contribution of the sponsor. So that's typically what we've been seeing going on in the market for now.
Very typically what you're going to see is a special purpose vehicle is set up specifically to do a given project. That special purpose vehicle will usually finance through a mixture of equity type instruments, maybe shareholder capital, maybe mezzanine finance, and it'll also look at some sort of debt or other types of loan funding. In addition to that, depending on how the risks are cut, and especially the risks that the private investor is willing to take, that investor may also look for other types of protection like financial guarantees, insurances, and all manner of things. Now, at the debt level, there are various options, one of which is you go to the commercial banks and then you raise debt. You know, these days you're looking at maybe issuing infrastructure bonds, which are specific to a project or to groups of projects, and various other ways like that. And of course, providers of debt are not just only commercial banks, which could be onshore, offshore. They could, for example, be development finance institutions and multilaterals who very often would consider taking higher risk than the commercial or investment banks would, because a key role of those development financial institutions and multilaterals is to help, if you like, catalyze investment where otherwise it might not go. On the equity side, you would usually have a sponsor, say like an ARM that is driving the project. It will invest equity, but it will probably also look, depending on the nature of the project, the size and complexity, etc., to bring in other investors into that. In that regard, they could be similar companies, they could be technical companies bringing equity. There could even be infrastructure funds, such as we are establishing in ARM today. So you need to look at the total breadth of equity and debt solutions that will come in. Very importantly, in terms of newer sources of financing for infrastructure that we're seeing, not just in Nigeria but around the world, is the use of pension funds to fund infrastructure. You see, pension funds typically have a long-term investment horizon. And as a consequence, it is believed, and I would definitely say it is the case in point, that infrastructure investing is quite aligned with that long-term focus of pension funds. Today we have about 3 trillion naira of pension funds available, and that is growing, especially as it appears that there's a large unpensioned population today that could easily come in the net. So that itself could be a huge source of additional funds. And it's good to see the support of the Pension Commission, for example, by issuing regulations that make it possible for pension funds now to invest in infrastructure, either through infrastructure funds or through infrastructure bonds.
Nigeria's infrastructure development, including power, roads, and aviation, have been neglected for decades. In the power sector alone, it's estimated that over $100 billion is needed to upgrade the country's power to support the rapid economic growth seen in Africa's second largest economy. That's almost 40% of GDP. Billions of dollars are also required to build roads, airports, and utilities. However, investing in infrastructure presents many challenges.
I think in terms of what probably makes it more difficult is that most of these transactions have never been done before. So for most areas, if you're looking at roads, railways, pipelines, they've typically been government transactions. And there are even a number of areas that are the exclusive right of the federal government, like when you go into state highways. So dealing with some of those challenges has been part of the issue. Because of course the other issues are around in terms of land ownership, right of way, the Land Use Act, how the federal and state government relates, who has the powers to do what. So some of those things are peculiar to Nigeria, and they're more peculiar because most of these areas were controlled by government monopolies. Coming out of that environment, a number of things will have to be ironed out as we go along.
The fact of the matter is that there must be in place the relevant regulatory and enabling laws to ensure that people can invest in infrastructure. The investor is going to want to know that if it now comes and makes an investment, say like ARM did in the Lekki Toll Road, we want to be clear that somebody wouldn't come tomorrow and say, hang on, there's no law allowing you to do that, and then you end up losing your investment. So that is a very basic thing. But regulation is also very important because you'll find that public-private partnerships, for example, are quite complex to deliver in practice, not just to structure them, but to also implement them. They have socio-political aspects to them, there are economic aspects to them, there are legal aspects to them, contract, all sorts of things come into it. And ultimately, it's about ensuring that you achieve equilibrium over the medium to long term of the interests of all the stakeholders involved in the project. And that itself requires some kind of regulatory balance. Regulation that is applied apolitically, that is applied transparently, and levels the playing field so everybody knows what to expect.
And funds don't operate in a vacuum. I mean, the fund is really a mechanism to pull investor resources together to deploy in a specific area. So for those funds to work, you need to have underlying assets. And I think that's the primary challenge in Nigeria, is that despite the infrastructure deficit, you can't point to many economically viable and legally well-structured infrastructure projects where the sponsors have significant equity to back the projects. Financial investors or banks are not going to back 100% leveraged projects or provide 100% debt. So you need the infrastructure projects to really exist first. Right now, you don't have many of them. And outside a few areas in oil and gas, pipelines, or power that is just coming up now, you can't really point to significant civil infrastructure that is available for these funds to invest in. So the assets have to come before the funds, not the other way around.
People either from the investment side or from the observer side who take a view and they claim all sorts of expert knowledge, but don't really have that expert knowledge, very often confuse themselves and sometimes the audiences. So I think we have to make more effort to educate all the players, be it government, be it investors themselves, be it the end users who are ultimately the ones that pay for the assets through tariff stalls and otherwise. But then there are other issues too, such as getting financing on the right terms. At the moment, interest rates in Nigeria are still quite high. The tenors of debt tend to be shorter than you would otherwise get in other places in the world. And some of the conditions could be fairly onerous.
Skeptics argue that investing in infrastructure in Nigeria is slightly overrated because it's difficult to find projects with predictable cash flows, and greenfield projects are too risky. However, fund managers argue that demand for infrastructure trumps that argument, and that the challenging terrain only requires the creativity and skills to make unbankable projects attractive.
A brownfield asset one day never existed. It therefore started life most likely as a greenfield investment before it now got to a certain stage where it could be stabilized and then reach brownfield status. Now, if we tie this also back to the extremely large deficit that we have in Nigeria today where infrastructure is concerned, there is huge need, I would say, for green fields that will eventually become brownfields. This is a critical point.
If you look at the pension fund investment guidelines, they've said that you could invest in mortgage-backed securities, infrastructure funds, infrastructure bonds, private equity. Now PFAs, first of all, because their monies for retirement are a bit cautious. They want to ensure that if those they make those investments, that they would be able to get returns, reasonable returns, and also that they don't take unnecessary risks such as construction risk or failed projects and things like that. And I think that the big winners will be people that can structure those investment opportunity in an appropriate format, because you have in some cases between 5 to 20% allocation that pension monies could fund.
There's projects everywhere in all the key sectors, power, transport, utilities such as water, telecoms, etc. There are huge opportunities. But here's genuinely what is a challenge, not just in Nigeria, I dare say in West Africa and throughout Africa as a whole, is having people who have the knowledge, the experience and the skills to actually develop projects, to a stage where they become bankable immediately. So when people come in and say, I want a project that I can just go and put money in right now, they will probably struggle because there are not many people that have the skills and experience to bring the project to bankable stage.
Sophisticated investors in Nigeria will soon have a much wider range of products to choose from, including specialized infrastructure funds. And while these funds come with unique challenges, sponsors of well-structured infrastructure projects should attract financiers. And that's our show for today. Remember, you can log on to www.abndigital.com to catch this and previous episodes of Eye on Nigeria's Capital Market. Until next time, I'm Wole Famrewa, and it's goodbye.